Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A key reversal down yesterday. A not wholly unsurprising move, as the market was once again capped by the declining medium moving average, currently at 96.71. What was interesting was how far the low reached. You see, recently we had seen how the market had not liked being below, or maybe one or all three of the following. That's the broken upper bear channel line, currently at 92.63. The slowly declining short medium moving average, currently 92.66. And the lesser Fibonacci line at 92.07. Add to this now the neckline of the October to November 2021 head and shoulders top, and that's currently at 94.59. So it was surprising to see how low, even as far as the short medium moving average and broken upper bear channel line, the dip and close ended up. Now, I'd previously spoken a lot about the twin bear channel idea I had for this market. We had a late July to date bear channel, currently 75.58 to 92.63, which had until 3 weeks ago been running this market. The move up broke this smaller of the two bear channels, so I'm now wondering if the market is repairing this upper bear channel line. We also still have live the second upper bear channel line idea, something I'd often repeated. Both bear channels have the same lower channel line, 95.58, originating from early August, but the second larger bear channel utilizes a March to date downtrend, currently at 103.30. The issue that clogs this idea is that just before this higher trend line, we have a congestion band between 101.55 to 103.35, which has lurking within it the ever so slowly rising long moving average, currently 103.32. There is one other pattern, an important one, that I wish to reveal that I had been talking about at the end of last week, and that is last week was a weekly key reversal up. This is an interesting pattern that seems to have come somewhat out of the blue, but it is there as a genuine pattern. The issue is whether the market really wanted to make such a pattern, especially given yesterday's actions. So far today, well, a lower open with a further attempt below the short medium moving average and a broken upper bear channel line, this time as far as dipping below the lesser Fibonacci line at 92.07, something we haven't seen since late October. Yet this caused a pullback up such that today is looking like an indecisive doji cross, which is interesting given last week and this week's actions so far. Spot gold. A bullish doji cross yesterday, but with a small tongue and a really long tail. I suspect it may have been having had aspirations to be a dragonfly doji. The market still ended up being anchored on the congestion at 1771 and supported below by the congestion at 1754. It seems the bullish incentive from the weekly key reversal up last week may have run its course for the moment. It nevertheless has still set up the conditions, with half of November gone, for this month to be a monthly key reversal. And thus, if we close on the 30th of November either over 1660 or under 1633, then we'd be on. Right now we are very much looking like a monthly key reversal up. Looking below, the next supports are the September 2021 low at 1721 and a slowly declining medium moving average, currently 1712. Meanwhile above, we have a congestion band between 1779 to 1788 that looks formidable, with above that a neckline for the December to date head and shoulders top action, currently at 1799. And finally, the long moving average further up still, currently at 1803. The overall action here since September, as I previously highlighted, is reminiscent of a triple bottom with a double bottom within it, formed over October and early November. For the smaller double bottom, we have had a final target in the 1745 area, which was achieved yesterday. For the triple bottom, well, that was triggered last Thursday, and we have a primary target X2 in the 1515 area, with a secondary harder to achieve target X3 in the 1862 area. So far today, a resurgence of the bullish incentive after yesterday's sojourn, pushing up into the congestion 1779 to 1788 and making a decent effort to try and push through it as a first time, but then pulling back, though still over the support congestion at 1771 right now. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.